Folks, welcome to the Contrarian Trader. This is Bob Desmond, your personal chart coach. Today we're going to go over normally it's 5, today it's going to be 6 favorite stocks under $10, which are setting up fairly well. These are not penny stocks. These are not stocks that are highly speculative. Sometimes they're traded on thin volume, so there is a caveat there. Beware of the thin volume. No market orders, limit orders only, because of the spread between the bid and the ask. So I don't want you to lose money on the buy. We never want to do that. Always limit orders. So these stocks here all have catalysts to the upside. I'll discuss all of these with members on the Focus Stock Analysis video. That goes out today. The difference between this video and the Focus Stock Analysis video is that on that video I go over multi-period charts, meaning I go over the daily chart, weekly chart, perhaps intraday charts to identify setups that work for us from a good risk-to-reward entry point. On this video here, I'm going to do a cursory overview of the daily charts. I'm going to give you a taste of what you would expect on the Focus Stock Analysis video as I go over the first stock, which is Zaza Energy. So let's kick it off with that. So what you're looking at first here with ZAZA is a daily chart. Now, what I emphasize with my members on a consistent basis is the fact that you need to utilize daily charts, weekly charts, and at times monthly charts. Why is that? It's because we need to identify where historic support and historic resistance may be. On this chart here, you can see that we have some support back in October, minimal in December, which it broke back down below, but we rallied back through it, and it is now acting as a key support level, which is good, but this is a short-term view. Now, we remain in a trading range. This is a pennant formation. Here is our upper band. Here is our lower band, and we are in a consolidation phase. And one might even make the argument that we have the setup for a possible inverted head and shoulders setup. Left shoulder, head, right shoulder. Here's your neckline up around this area. Now, I'm going to come back to this chart in a moment because there are items on this chart that concern me. So first, let's take a look at the setup on a weekly chart. On a weekly chart, we are able to identify that there is no historical support below. Now, how do I know that from a weekly chart? This only goes back to the back end of 2010. I've already taken a look at the quarterly charts, which goes all the way back through the history of ZAZA. I know for a fact that there is no historic support below. So looking at the RSI, you can see that we're making a series of higher lows, which is very bullish. Higher low here, we're hooking up here at present day, and we appear to want to head higher. Now, we remain in a downtrend that formed back in 2011. And in August of 2014, we went into a parabolic downward move, and we are in a secondary downtrend. Here is our primary upper band of the downtrend channel. Here is our secondary downtrend. Now, we've rallied off of the December lows. The question is, will this, what I call a tripwire here in dotted line, will this tripwire hold, or do we come back down and test $1.22? So the argument can be made by simply using the oscillators that the chart looks good. We have higher lows on price. We have higher lows on RSI. We have volume, which has been picking up. Last week we had higher volume versus the prior week. And these are the type of comparisons that we need to look at prior to drilling down to that daily chart and seeking out a good risk-to-reward entry point. Is it clear and decisive yet that we have a great risk-to-reward entry point? Not quite yet. Ultimate oscillator, we're beginning to roll over. Possible head and shoulders setup on the Stoch RSI. When have you ever heard anybody talk about a head and shoulders setup on the stochastic RSI? Probably never. I do. These are the signals that the markets send us. It's not a clear and decisive indication of where the stock is going to head. It's just a clue, something we file away in the back of our minds. Before we get long, we identify these potential threats that are on the horizon. Because if we break down below this neckline here, that means that in all probability the stock is in a decline. It would have meant that we have broken this support level, this short-term uptrend line, and we could quite possibly be coming down to $1.22 and retesting that support level. Now, weekly stochastics look really good. Higher lows last week were hooking back up, so it's consistent with the RSI, and we also have a consistent Williams percentage R. So we have a mixed bag of clues that the market is sending us using the indicators. The price action is looking strong. We have yet to break out above the upper band of the declining downtrend channel, yet we are close to the lower band of support. So if we wanted to get involved, we could just put a stop loss just below this lower band, and we get stopped out with a small loss. No big deal. We take a small loss for possibly a big upside gain. Now, going back to the daily charts and discussing what concerns me, RSI, we haven't broken above 50 yet, which is a concern. This is the neutral level. It's a sign of weakness. Now, we had a huge run up from the December lows. We rallied up to $3.91. What are people doing that bought back here? They bought here, they bought here, they want their money back. I mention this all the time. This is not innovative thinking on my part. It's just pure and simple psychology. How many times have you taken a loss on a stock, you sat through the entire downward move, you didn't keep your losses small, you're kicking yourself, all of a sudden that red entry that's been sitting on your trading platform, nagging you for several months, all of a sudden turns green, you're just happy to get your money back. And that's what you're seeing here. So the buyers here are keeping the pressure on the stock down. How do I know that? Note the topping tails on the candlesticks. Topping tails on candlesticks imply that there are people selling into any strength. So this is a consolidation phase. Is it bearish? No, it's a good thing. It's the pause that refreshes. This was a short squeeze. That's why the sellers here were not able to overwhelm these buyers. Shorts were getting royally ripped, and the stock only trades on average 200,000 shares per day. You had institutional buyers coming in and just really tearing the faces off of shorts, and they were willing to pay any price to get out. That is gone right now. So right now you're dealing with buyers from back here looking to get made whole, pure and simple. Now, daily chart we use is our timing mechanism, as well as the intraday charts, usually the 30-minute chart. Now, volume to the upside declined on Friday. That's a bit of a concern. That implies that with these topping tails, we could see a further pullback and a retest of support. So while there are reasons on the weekly chart to get bullish, there are reasons on the daily chart that we are not quite bullish just yet, that the time is not right. It may be soon. Now, taking a look at the slow stochastics, note how we're rolling over. We have a double top below 50, very, very bearish price action. Now, were this a momentum stock, I would say sell the stock. Get rid of it. It's probably not going up to its all-time highs. Now, this is a stock that's in consolidation. So many times what happens is that your oscillators get skewed because of the consolidation. You're not going to read about that in Technical Analysis for Dummies. This is what I teach my members. So while this is a reason to be cautious right now and a reason not to go jumping in with both feet, it's certainly not a reason to sell, or it's certainly not a reason to move on and take a look at another stock. We're going to watch this one because in a few days, this will be resolved. And if we pull back, we loop back up above 20, that will be a very bullish event. What was bearish will then become bullish. Same thing as you had here. We found a bottom on the slow stochastics. We loop back up, rolled over, bearish here, then we loop back up, bullish here. You're not going to read about that in Technical Analysis for Dummies. Rarely are they going to talk about double bottom setups on slow stochastics. You find them more often than not. Higher lows on the Williams percentage are a bit choppy, so it's a bit of a concern. So this is what we're going to be looking at on the Focus Stock Analysis video later on today with members. That goes out every Sunday to all members. And folks, moving forward, the 5 focus stocks under $10 will only be going out to mailing list members. So please enter your email address. We hate spam too. You will not be spammed. And I'll get that video out to you every Sunday. Now let's move on to our other 5 focus stocks. AAOI, Applied Optoelectronics. Remember, folks, I don't really deal with penny stocks. I don't deal with pump and dump stocks. That's not my style. I deal with stocks under $10 that have accelerating earnings growth, good fundamentals. That's what's critical to me, because that's how you get, as Peter Lynch would call them, your 10 baggers, 10 times your money. So daily chart, AAOI looking strong. We have been in a downtrend and we remain in a downtrend. So what's critical is to take a look at the weekly chart and identify where we stand, removing all the noise of a daily chart. The weekly chart smooths out all the noise, and you get a clear indicator of where we may be heading in the coming weeks. Now, on the daily chart, you can see that we're putting in higher lows, and we're breaking out above key resistance levels. Now, is it time to go jumping in right now? Not just yet. What we'll be doing later on is going over the weekly charts, intraday charts, and coming up with a strategy for the coming week. Volume to the upside declined. However, we are breaking out an ultimate oscillator. The chart of AAOI is looking constructive, and we broke out an RSI. That's a forward-looking indicator. Now we need to concern ourselves with two things. One, is the breakout longer term sustainable? To answer that question, we need to use the weekly chart. The second question, are we timed appropriately to get involved with the stock? We would need to use the daily and intraday charts to identify our buy signals. What do we want to see on the stock chart for us to get excited about getting long and identifying a good stop loss point to keep our losses small and maximize our upside return? And again, I'll be going over that with members on Focus Stock Analysis later today. Advantage Technologies Group, AEY, really nice double bottom setup here. On the 2nd of February, we flashed a big bottoming tail, not quite a bullish key reversal, but very, very close. We remain in a pennant formation. This is one that we're very interested in. A bit of a concern here is that we may see some weakness on the slow stochastics if they begin to roll over. Again, remember, it's in a consolidation, so the oscillators can get skewed. So we don't want to put too much emphasis on the oscillators unless, of course, the stock is breaking out, yet your oscillators are sending you weakness signals, especially with the slow stochastics and the RSI, because they are forward-looking indicators, unlike the MACD, which is a lagging indicator. So AEY looking very constructive. Again, we'll be going over this later on today with members, multi-period charts. ALQA, Aliqua Biomedical. All right, really pretty setup, double bottom setup here. Here's your pivot point at 6.12. This is a W formation, because you may be saying, what the heck is a pivot point? Okay, so here we have the left side of your W. The center is your pivot point. Here's your right side of your W formation. Now, the markets send you signals. Remember, I'm not a believer that the small guy cannot make money in this market. I'm still a small guy. I may be a professional investor, but that doesn't make me an institutional investor with hundreds of millions of dollars to invest so I can manipulate a stock. I cannot move markets, but I refuse to believe that I cannot make a very, very comfortable living in the stock market, because I've proved it over and over again by outperforming the S&P 500. So here we have a stock that was in a consolidation. We broke out, pulled back, and you'll be asking me in a few minutes, get back to what you mean by the W formation and the pivot point. I'm going there now. What you want to see on a stock in this type of formation is a breakout above prior resistance, a pullback, a retest of that support level, and then a move higher, and then a breakout above prior resistance. In this case, 5.719. We broke out above it. Very bullish. How is our volume? Very bullish. Above average. Here we are nearing the pivot point of our W formation or double bottom setup. Now, this is where the test is always at the top. This is really critical, because remember back here on November the 3rd, sellers moved in and they pushed the stock down. Now you're seeing a little bit of topping action here at $6.27 to $6 per share. Now we need to identify a good risk to reward entry point. Note how we're trading above the upper band of the Bollingers. It's a bit overbought. However, there are catalysts in this stock that want to get me long of it. So it's all about timing. I will be sending out alerts to members if and when I do decide to open up a position. But this chart here is setting up very, very nicely. It is broken out of its declining downtrend line, which is not something that we've seen on the other stocks I went over today. CFBK, a bank. Remember, interest rates are going higher. Who is that good for? That's good for the banks. And this is what I teach my members. We always want to identify what confirmation indicators can we use to determine when is it good to enter or exit a stock. In the case of the banks, whatever bank you want to choose, higher interest rates are good for banks. It's because the spread on the loans that they make becomes wider, and therefore their profit margins become wider. Also, if you are trading commodities, if you're looking to buy oil, if you're looking to buy wheat, whatever the case may be, gold, etc., silver, they are all dollar sensitive. So you always want to identify, how's the dollar looking? How's the US dollar looking relative to my commodity positions that I'm looking to put on? Because we know, because we're educated, that a strong US dollar means weakness in the commodities market. So it may not be time in a strong dollar environment to go long of commodities. And again, this is what I teach my members. All right, back to CFBK. It is in a consolidation. The weekly chart will tell a lot. I don't have enough time on this video to go into that, but I will later on today with members. Very volatile stock, thinly traded. Again, no market orders. I beg of you. You don't need to be a member for me to give you that free advice. Please, I don't want anybody to lose money. No market orders on these names. The spread between the bid and the ask is far too great. Don't do it. Limit orders only. You need to show discipline. Don't get excited. You're always going to get a second chance with getting involved with these names. Look at the backing and filling on CFBK. So we're at the lower band of its trading range. This is a good risk to reward entry point. But before we make that move, we want to take a look at the weekly and intraday charts. Now, RSI is trending down. We cannot close above 50. That's a concern. Volume to the downside was weak on Friday. That's fairly bullish. A bit of a concern on the slow Stokes. Will we roll over? Possible head with shoulders setup on the MACD. And this is a lagging indicator. Left shoulder, head, right shoulder. Here's your neckline here. Now you can see it better. We break down below this neckline, right below this double bottom setup on the signal line. You need to avoid the stop, because if we break down below that level, that means we would have broken down below this lower band of support. So again, it's all about identifying your risk to reward entry points. You want to keep your losses small. I'm not here to say I don't take losses. And anybody, I don't care if they're an institutional investor, ever tells you they don't take a loss, they win at 95 to 100% of their trades. They are liars, folks. They are blatant liars, and avoid them like the plague. I digress. So watch the MACD. Really watch the slow stochastics. This will send you a signal before the MACD does. If we see continued weakness on those oscillators, that means that this lower band is being threatened. And if we close below this lower band of support, you need to avoid it like the plague. Last stock up. Actually, I'm going to go over. I meant to go over the IWC and the IWM. So those are critical charts because I don't want anybody to get hurt in the market. And it's critical to identify where the small caps and the micro cap indexes are trading. So I'll get to those in a moment. Let me just get through CRCM, which is care.com, NYSE traded stock. In a pennant formation, we broke out above the upper band of support. Now back here, on January the 28th, we flashed a breakout point failure. So this is where my 3-day rule comes in. I'll go over that with members later on today. It's critical that we abide by the 3-day rule, because all too often, over the past several months, breakouts in even momentum stocks, healthy stocks, have failed. Same thing goes for the Russell 2000, and I'll go over that in a moment. So we need to abide by the 3-day rule. There are different definitions of the 3-day rule between different investment professionals. I have my own. Others have their own. I'm not saying theirs is wrong, but it's just a completely different definition of what my 3-day rule is. So while we've broken out above the upper band of resistance, it's not time to buy yet. And I will draw your attention to the rising down volume bar seen on Friday. And we'll go over the weekly charts on this one as well. Higher lows on the slow stochastics looking good. So it might be time, right? We're just identifying opportunity. So now we need to identify a good entry point where it gives us the most probability of making money. CRCM, ZA, they're all just vehicles to making money. I don't care if it's BAC, Bank of America, or BKMU. It doesn't matter to me. All that matters is that we have a good risk-to-reward entry point, and so that if we take a loss, we live to play another day. And that's all that matters in trading. Let's get to the IWC and the IWM. First, we'll go to the IWM. Okay, now there's a lot of volatility in the market despite the fact that the volatility index has pulled back so much. Now, what's a breakout point failure? A breakout point failure is that when we break out above resistance, that we fail to hold those gains and we roll back over into a trading range. And what will traditionally happen is that we will retest the lower band of that trading range. And there's a very, very high possibility that we break the lower band of that support level. Now, in recent days, and why am I going over the IWM, which is the Russell 2000 tracking ETF? The reason is that you must understand and appreciate the health of the overall index of the stock that you're looking to trade. Now, in the case of the names I've just gone over, they're micro caps. And I'm going to get to the IWC in a moment, but the micro caps are also in the small caps. So we want to take a top-down approach. How are the small caps behaving? Now, all of these indexes, S&P 500, the IWM, weekly, daily charts, I went over on the Market Pulse Check video with members yesterday. They've had that information. They are prepared to go into the trading week ready for battle. They know how the markets are most likely going to behave in the coming week. That's already posted. Today is the Focus Stock Analysis video. So in recent days with IWM, what I mean by recent days is the past several trading weeks. And we have had several breakout point failures. We broke out back here, failed and rolled over. We broke out here, failed and rolled over. Again, here in early January, failed and rolled over, back into a trading range. It's amazing that we have yet to break down below this key support level and spend any serious amount of time below it. We did it again on January the 28th. There is a tremendous amount of volatility in the marketplace, despite the fact that the volatility index has pulled back so much. So now we've broken out once again, which is bullish for the stocks that we're looking to trade. Or is it? Let's take a look at the micro caps. Okay, now all the symbols I just went over are all micro cap names which have very, very good fundamentals. They have accelerating revenue growth. I look for that all the time in the stocks I'm looking to trade. I also look for catalysts besides accelerating revenue growth, because revenue growth means sales. EPS, or earnings per share, can be manipulated, and in micro caps, many times they're reinvesting their sales back into the business, so they're not realizing earnings per share. So those are real serious growth stocks. Now, taking a look at the IWC, which is the Russell Microcap Index, we had a bearish key reversal on Friday. That is not a good sign. It underperformed the Russell 2000. So the fact that I'm seeing a bit of weakness after we broke out of a flag formation is a bit of a concern. Let me draw the flag formation for you. Okay, so here you have it. We broke out. Now the question is, do we hold this breakout or do we break back down into this trading range? If we do, then in all probability we're heading down to this lower band. Now, what will happen if we do break down into this trading range? What will I do with the stocks I just went over? AEY, AAOI, ZAZA, ALQA, CFBK? Nothing. Absolutely nothing. It's because the market is sending us a signal that the parent index is not behaving well. Cash is a better investment, and we will sit on that cash, and we may even look for short opportunities in other names. Not necessarily these names I went over, because I think anybody that was short has made their money, and there are better short opportunities out there. So that's the name of the game as we proceed into the coming week. Again, folks, if you get any value out of the stocks under $10, which I'm going to be sending out every Sunday, please enter your email address. You'll get it every Sunday. Saturdays, I'll be sending out the best stock pick video. And if you need a trade coach, folks, I'm your guy. This is what I enjoy doing, teaching people how to read the charts, how to beat the market. Because if you're able to formulate a game plan going into the trading week, not trade impulsively, Look at the stock charts. Get a second opinion on the trades that you're looking to put on. And yes, I provide that second opinion. And you don't even need to tell me that, Bob, I'm looking to go long or short of IWC. All you need to do is just send me the symbol, and I take a look at it, and I say, this is my opinion on IWC. Take my advice or leave it. And take advantage of our 14-day free trial offer. If you're watching this on Stock Twitch or Twitter, please follow me, share this with a friend if you think they'll get any value out of it. And I'll talk to you soon, folks. Be well. Have a profitable trading week.